Yo, what up? All right, this is an interesting session. Thursday expansion is it's day before OPEX tomorrow, so sometimes dicey a little bit, but yeah, Thursdays usually expand, and it did, decently. Now it's starting to balance. I'll go dive into the tape of the session. It's very interesting. We crossed over a significant resistance. We actually came and retested it, so this is gonna be very interesting for next week and for tomorrow too. See what happens. Yeah. Let's take a look here. So initially off the bat, yeah, we see some good rejection points overnight. This is a larger time frame TR pocket. If you know, you know. Look at other videos. So that rejected overnight. That was your overnight resistance. Had that marked out on NQ. And then, yeah, we're just bullish off the open. No reason not to be currently. Yeah, also, if it's going to be a big sell day, New York is selling the top. They're not taking seconds or thirds to Asia or London. So yeah, I just waited for the tape to confirm. I took a long off open, basically. Really bullish off open. Right at the lows here. Yeah, you had sellers piling in and then nothing. And they just easily got overtaken. Then you saw, so I didn't catch nearly all of it. It was on NQ. I exited pretty early around this previous POC. And yeah, it obviously went higher, but I'm just taking my little chunks, going with the trend. I'm not gonna fight it until I see proof of a seller taking control, which I still have not yet. And let's take a look at the tape here. We'll dive into it. I'm gonna also present like an alternate theory. I still think I'm in the camp that this is just a generational blow off top, and it's just we're creating insane bag holders up here. But I'll talk about, the other side to that, how it could possibly still continue into a bullish scenario. Always good to view both sides as a trader. But yeah, let's just dive into the market open right now. Just look at the tape. So you see initial bullish open, a lot of stacked imbalances created there. Again, we're still early in the open, so let the IB play out. See a seller come in and trying to aggressively make new lows. They easily got bought up. There's a lot of, look at that, all that positive delta over the first 20 minutes of the open. So yeah, that's a lot of work for a seller to get through. Yeah, they tried to make their case and immediately got bought up. Then we push into this resistance level that I had marked out, 7507 I mentioned on X2. It lines up with, on SPX, lines up with the top of this very macro TR pocket that I had marked out there as well, 7485. So I did say, this is why I need to present the case. I need to go, hey, well, how could I be wrong this scenario? Because I was like, if we break outside and retest and then hold, then I'll have to start to consider the fact that we're going to continue up. I still think that we're going to fail soon here. I don't think it's going to be that easy. I would have to see a real consolidation here, retest a little bit lower, and then move up for me to be convinced. Just a little retest right here. It looks too obvious, and then we could easily fail from there. So we'll see. But yeah, it lined up with 7507. Oh, I hate when it does this. Lined up with 7507 on ES. So you see there, you see some selling balances there, some aggressive sellers pile in there, and just no chance. Buyers are in control. These candles don't even finish in the negative; they finish positive. So these sellers just got absolutely murked, and then we actually create initiation out of this. So out of that resistance, we see these stacked imbalances on the bid on the buy side. And then we see look at this delta following. So that's how you know heavy buying up here. So that was very interesting to me. I was like, oh boy, there's a lot of continuation possibility up here. There's a lot of buying. There's a lot of confidence, it seems, at these levels. Again, could big holders, you don't know. But yeah, a lot of buying. So we're just getting into this where we're basically almost going vertical. I've been through enough blow-off tops to recognize the price action of it. It looks very sorry for all the markings, but we're just starting to go vertical. So that's essentially what it starts to look like at the end. And then, yeah, psychology just lines up. A lot of factors line up. So we'll see. But I'll be looking for, a little bit of a balance. And then ideally next week, test up here. So the weekly candle can engulf. Test up here, 7560, and then reject, and then start to work our way lower. I'm not going to get involved unless we're up here and I see, 1K lot seller basically. At around 7560, I want to see some mega selling to start to try and ride their coattails up there, because you just don't know how long these could really go for. I don't want to get caught on the wrong side of it. Or what I would look for, double confirmation if you're going to look at buying puts, if you're an options player, I would wait until, because that initiation happened. I even said when I marked it out earlier, and I put it on X too, I said kind of from that 75 area, 100 area, including the initiation that you saw, basically up to, where did that buying continue up to? Continued to about there. So I would say, around there. Yeah, so heavy buying there. So I was basically saying I don't want to short in this region. I don't want to short above it unless I see very definitive proof. Like, again, 1K lot seller, 1K plus. If I see 2K, it's, call home, it's over. But 1K lot seller plus up above there, I will ride their coattails and see if I can catch a big sell day. Otherwise, I will look for that to slowly break down, and then I'll look for sellers to gain control once they break through the 7,500 area, and then ideally retest, reoffer 7,500. And then from there, I think as long as they hold below 7,490, and then I want them to aggressively attack 7,400, and then I want them to basically close below 7,390, and then reoffer below there, and then I'll be pretty confident that the top is in once that happens. But yeah, so that's what I'll be looking for. Right here, actually, you want to look at this. So when you see a gap, like ICT calls a fair value gap, kinda, they're not all equal. Obviously, some gaps literally have like no stacked imbalances in them, and so that's why likely those gaps fail. Because there's no initiation within the gap. So the gap is created because a buyer, either or buyer or seller, depending on which direction it's going, has kind of planted their flag, and they're initiating their position. They're initiating away from it, and initiating distribution higher or lower. They want to balance higher or lower. They want to get away from their position, get into profit. So you'll see these stacked imbalances like you do right here. So that was after we hit that 75.07, then we pushed away from it, and you see those stacked imbalances. That's a good kind of initiation look. You don't know how far this could go for. It could go for 20, could go for 50, could go for 100, more. You just don't know. So, but at least you're seeing someone has like essentially made their mark down there, and they're looking to push and balance higher. And then what is that? Let's line it up here. You see 75.07, basically 75.07, 75.08. So you see at the highs, we reject there. You see actually, this is a good look for highs. You see a big buyer, but then you see selling start to come in. Then you see a bunch of sellers continuously looking like, look at that 0, 0, 0, 0 on the sell side. So they're not even interested in selling any higher. They're just trying to sell lower. You see some bigger sell orders come in, and then you see initiation away from that. You see stacked imbalances on the sell side. So that is a good look for lower. But where do we come all the way down to? 75.07, 75.08. That's literally the very bottom of this retest. So retesting that gap and then pushing back higher. I don't think this is going to be a huge push higher. I think we're just going to rebalance. But if you're looking to take scalps like that, it's a good look. There's how you snipe some entries like that. And then look at that, even you got the divergence there, so more sells, more contracts sold than bought in this region. But look at that, green, green, green. So there's a good divergence, so that this could easily continue higher into PM. I don't know, we'll see. So the case for how this could continue higher, how we could see a bullish trend continue. Again, that's not what I believe, but I gotta present the theory from a macroeconomic standpoint, because I need to be able to wrap my head around it. I need to go, okay, well, how is this possible? At least let myself see how it's possible, so that at least if I'm gonna continue to enter buys, I can go, hey, there's that possibility. Because you gotta see both sides of every coin when you're a trader. You don't want to get married. So anyways, what is the case? So NVIDIA earnings tomorrow. So big tech earnings there, arguably the most important earnings of the year, because they carry the most weight in the indexes. They're advanced GPU maker, they're chip maker, so they're good at creating guidance and showing the demand in AI, because they're the hottest commodity in AI. Their chips are very necessary right now. They can always give guidance as to the justification for the hundreds of billions to soon trillions of capex spend that we've just witnessed by these Mag 7 companies. So they can go, hey, yeah, we're seeing mass adoption, especially in the white collar space, which is, white collar's first to go, then blue collar, if Tesla gets these humanoid robots going. But yeah, they could be like, we're seeing mass adoption in the corporate world, and we're seeing a lot of companies shell out big bucks for AI. So there you go. There's the justification. It's happening. We're seeing mass adoption. Great for AI, bad for the jobs market. I don't really see how that still pans out in their favor. There'd have to be some other incredible utopia breakthrough. I just don't see it. But yeah, so that's one possibility. They could give a very bullish guidance for tomorrow for basically saying, because that's what analysts are looking for. Analysts want to know, how are these companies going to make money? Is this going to happen? Or are we going to have another .com era level of failure for revenue? These companies do make money, but they do not make nearly enough money to justify the capex right now. They're just money pits overall. They're net negative. So yeah. NVIDIA could say, this is how it's going to happen, and there you go. So that's one, and that would justify, where is it? Nope, 80 line. So that would justify the really, really high concentration. This is not a good look overall. This is what you see in generally market tops, is this kind of, the breadth is just like nosediving as these indexes are taking off. So just absolute concentration in just the smallest amount of companies. You even see on the McClellan, you see net overall selling. So more stocks in these indexes making lower lows than higher highs. So that is not good. But, if they say that and you say, oh yeah, these AI companies are about to make stupid amounts of money, that's really the only way you justify that. So anyways, the other theory is, and this is a newer development, but Trump is in China with all the heavy hitters in tech and banking. So you have the CEOs of BlackRock, Blackstone, Citadel, Citigroup, you have Apple, Tim Cook, Jensen Huang, NVIDIA. They're all there. So everyone's theorizing that Trump could be possibly trying to make new trade deals and create new trade routes with China and stuff, new trading lanes, opportunities. So that is, overall good. More trade is better. So I don't know how these tariffs come in or what he's going to do with that. He claims that he's going to be able to use tariffs as a negotiating thing. But China knows they have the upper hand. They're not idiots. And why do they have the upper hand? Because they buy Iran's oil. And this, for the global market, China they can withstand a lot of hardship. That's one thing we know about China over the years, over the decades and historically millenniums, is China is very good at tolerating hardship. So, and because of, the nature of how their economy works and them being communist, they're just kind of all is one, and no, they're not as much free market. So, if they say, hey, this is gonna suck, we're gonna tough it out, they will. So they know they have the upper hand because basically this war, obviously what the market really wants is this war to end. They need the Strait of Hormuz to reopen. Regardless, it's going to take a while for it to reopen. We know about that from that Pentagon leak. It could take up to 6 months, but it needs to open. This war needs to end. And one way to force Iran to the negotiating table, or to even put them in a financial chokehold and just absolutely force their hand and potentially de-escalate this or overall end it, is if the U.S. is somehow able to convince China to buy their oil from anyone else other than Iran. That is how Iran finances their war and finances everything. It is like over 90% through selling oil to China. So if they're able to do that, if the U.S. is able to go, hey, we'll create all these advantageous trade relationships and new no tariffs, and this will be great for your economy. But you can no longer buy oil from Iran. You can buy it, from us. You can buy it from Canada. You can buy it from anyone else. A bunch of people source it from multiple partners. Just can't be Iran. If they're able to do that, Iran is screwed. That is the end of that. I don't know what they do. Having said that, that is really scary because the IRGC is not exactly the most sane folk. They will probably go out guns a-blazing. I don't really see how they just come to the table. But, look at this. Wow, look at this sell right now. This is interesting. But yeah, we don't know. We'll see. They could just come to the table and they could negotiate and figure something out, and that could be what the market is pricing in right now. They could know that. They could know that is why Trump is there. And if that happens, then it's a done deal. Having said that, the damage is already done in my mind. So I still don't see how this, that works out for much longer of a bull run kind of thing. Just because the inflation spike that we're about to see is going to be like biblical. It's going to make COVID look like a bump in the road. We already have countries all over the world running out of oil. They're on just at the bottom of their reserves. You have countries like Australia already instructing their citizens to essentially stay home if they don't need to go out because they just are literally running low on oil reserves, oil and gas. So that's not good. If you're in North America, you're lucky, like me in Canada or the US, you're top producer exporters. So that's good. But yeah, other countries not so lucky. And it's just there's a total supply shock going on right now. So that is going to create an inflation shock. Everything's going to get more expensive. So overall bad for the economy. So regardless of what happens in AI, what happens with the war and everything, it's about to be bad news bears no matter what. So, I am presenting those cases as to what the market is pricing in, why it's pumping. I think it is kind of even deeper into that psychology. It is making, making people think, oh yeah, that's what's going to happen. So we're just going to continue higher. When in fact it's going, yeah, that's all going to happen, but you all are still screwed. And this is just a huge transfer of wealth. We're just creating, like I said, generational bag holders right now. You're starting to actually see, sellers taking a bit of control into the end of the session today. They're really attacking the 7,500. They do not like being up here. So and we're above that zone on SPX. So I do want to see that. I do want to see pretty dramatic failure above the zone. I don't want to see continued action going through there as far as justifying this being like a topping moment kind of here. I don't really want to see us top today. It's pretty late in the session. This actually is 2 o'clock open, so start of a new 4 hour. Well, it's 12 o'clock for me, but I'm 2 hours behind. So yeah, we have a start of a new 4 hours. So don't really know what's going to happen here. This basically just went straight down. So it could, again, I just want to see balancing right now. I don't want to see it happen late into the session. I want to see, if we're going to see a big sell day, I want to see it happen right away, early in a session, whether it's tomorrow, whether it's Monday, whether it's Tuesday. I have no idea, but I want to see us basically open at the highs. I don't care if they're both at the highs because YM is nowhere near the highs. And I want to see just absolute failure and then just like aggressive selling into those levels, like I said. But having said that, commitment to traders report, mainly care about S&P. Again, we can look at NQ, but institutional asset managers right here, you see that they are very net positive. So this is on the weekly. It'll be very interesting next week to see if there's a big change here. If I see a big drop matched with the big drop in price, that'll be it basically. You'll see institutions they're done being long. They're done basically propping up this market on low volume so that everyone can sell out of their equities, and they're going to start taking the opposite side, and then we're going to see quite the sell. We will see. It should be very interesting. Let's see if that opens up. NQ, yeah, same thing. Net positive on institutions, and dealers, leverage funds are net negative. It's interesting actually if you go to, I'll just look at the S&P because there's more volume. It's interesting actually, you see here right at these lows right there, or this, not lows, but I guess this is the lows of this year. You see leverage funds are actually getting closer to neutral, but ever since we've been rocketing up these leverage funds, they're holding short. That's very interesting. I feel like if this is the case, we'd actually see them ripping to the upside. If this was a garbage scenario, if this was not just blow off top, we would actually see these guys being like, oh crap, and going to positive, they don't want to lose out, but that's not happening right now. They're short. So that is very interesting. This just tells me institutions, they're propping this up. Leverage funds, they know what's up. Then you have basically when you go to the COT report, which isn't widely used anymore, but everyone is almost net neutral right now. You have non-commercial large speculators in the negative, and small speculators, they're positive. So that's retail right there. So yeah, they're long too. But when you see that all switch, see institutions start to drop off. Start to go from there to 800,000 to 500,000. Crawling closer to neutral, that should be it. You should know right there that they're done being long this market. So yeah, look at that. Yeah, it's nice. So we're holding there. So we're just going to balance in here, I think, for the rest of the day. Granted, barring any news or anything. I think that covers that. So yeah, those are the two cases for how it could continue. Again, after that, I still don't really see how much longer it could go, just because neither of those really end well overall. Retail sales came out today, and yeah, it wasn't like a shocker. The market was, that's the thing, the market was already pricing in. Look at that difference, month to month. Like that is cut like by a third almost. So the market was already pricing that in, so that's why it wasn't a shock to the market. Still not a good look though. That's very low. That's basically flat. So that is, that shows you that the consumer is not strong right now. So whatever that guy in Trump's corner, I can't remember what he is, dorky looking guy in the administration who was going on Fox News bragging about how strong the consumer is, and he was referencing credit card spending to do that, saying credit card spending is at all-time high. Like, again, how disconnected can you be? Obviously, credit card spending is an all-time high. It's because people don't actually have the money to pay for stuff, and they're using credit cards to cover all their just basic bills. So yeah, that's why it's at all-time highs. Idiot. So yeah, the retail sales basically just proves that consumers are not strong at all, just on the broad scope. Unless you have a massive 401k, and then you're chilling right now. I would sell personally. I would get out. I would go cash. Berkshire Hathaway doesn't have a $500 million short position for just no reason. Yeah. Anyways, so that basically covers it. I think that's everything. So yeah, what I'm looking for, consolidation. I don't know what's going to happen tomorrow. It is OPEX could be crazy. Every now and then you do see a crazy OPEX. Usually it just pins. So we'll see. But I would like to not create any significant high tomorrow, because I want to sell off next week if we're going to sell. That is the theory for the sell. If we're just gonna pin, then we're actually gonna, from there, we're just gonna pin up here. We're gonna hold there, and then bullish continuation higher. Honestly, from there, if this doesn't reject, then we're looking higher. So then I expect some pretty significant news to come out from there as well, for the bullish case. But yeah, I'm still of the opinion, like I said, that we're topping right now. So yeah, trade safe tomorrow if you do. Take care. Enjoy your weekend.